How can tax departments help companies master the maze of change? This is the IssuesWatch podcast. Hi, I'm Don Meyer, Chief Marketing Officer at the New Jersey Society of CPAs, and welcome to the IssuesWatch podcast. Tax departments are poised to lead their organizations into a more resilient and empowered future. That's the lead-in to KPMG's new report, Tax Reimagined 2024, Perspectives from the C-Suite. The report surveyed 500 U.S. C-Suite executives at companies with an annual revenue of $1 billion or more. The findings reveal how tax departments are grappling with new complexities while also expanding their value proposition. Here with me to discuss the survey's key findings is David Neuenhaus, the partner in charge of tax of KPMG's New York Financial Services business unit. Welcome, Dave.
Thanks, Don. Great to be here.
So the report said that leaders are facing a dual mission. Number one, anticipate and navigate unexpected or unprecedented scenarios. And number two, future-proof the department. So let's start with navigating unexpected or unprecedented scenarios, which these days seems like the only type of scenarios that CPAs face, and a definition of what KPMG calls the tax trifecta. What is the tax trifecta?
Yeah, thanks, Don. So look, it's certainly exciting times in the tax world for both taxpayers and their advisors. We're indeed facing a broad array of disruptions. Our survey underscores this. We found that nearly all of the C-suite executives that responded to the survey, so 95% of those surveyed, really believe that the current tax environment is more challenging to predict and plan than ever before. And that's really saying something because we've seen disruptive tax policy and programs in the past. Of course, everyone's been focused on the election, sort of first and foremost, and what that can mean for taxes. It's great that we have that behind us, but it's really still too soon to really know what that means from a tax perspective. So we've been advising our clients that the election is just a moment in time, and that the larger story here really is around this tax policy trifecta dynamic that you mentioned.
So I think you mentioned the presidential election. A big topic of conversation are the expiring provisions of the Tax Cuts and Jobs Act. That's certainly going to create some disruption. So how do tax departments and practitioners prepare for what may or may not happen?
Yeah, so the TCJA is really one of those three elements of what we've been calling the tax policy trifecta. First is around that domestic tax policy uncertainty, the tax cliff, as many people are calling it. And we're looking at the possible expiration of almost all of the individual provisions and a number of those business provisions that were in the TCJA. That will happen throughout 2025, at the end of 2025. This would really have a substantial impact on businesses. And it's ironically one of the most significant tax legislative events that we've had since the enactment of the TCJA in 2017. On the other hand, not knowing which direction the policy may go, if the TCJA provisions are permanently extended and don't expire, that would result in primary deficits of about 4 to 4.5 trillion, depending on if you include interest charges or not, over the next decade. And of course, we'd have to find some ways to offset and pay for those deficits. So the TCJA is one of the three elements of this tax policy trifecta for sure. But we also have two other important developments. Second is really global tax policy. So in addition to the US tax cliff, we've got both the OECD BEPS program, we've got a parallel UN initiative, and many local country and regional developments that impact US taxpayers and just add to this uncertainty. I think the folks will be most familiar with the OECD P2 or Pillar 2. It's probably the best example, and it's really designed to ensure that multinational enterprises pay a minimum effective tax rate of 15% on income earned from every jurisdiction in which they operate. It's a reality in more than 30 countries today. And while the US has not adopted it yet, it does directly impact our taxpayers. So the implementation and preparation for P2 is already proving costly. There's still some uncertainty around it. The rules themselves are challenging to navigate. And another layer of uncertainty is whether or not the US adopts P2. And if they do, then the environment becomes even a bit more complex. And part of that is not just understanding the substantive rules, but also the data that's needed for the compliance and the planning around P2. And there is a lack of formal guidance. So taxpayers are a little bit challenged in that second basket, which is around the global tax policy. So then we have the domestic tax uncertainty, we've got the global tax uncertainty, and then we have this third basket, which is the third leg of the trifecta, which is with respect to regulatory changes. And this is really deciphering some of those existing regulatory packages we have around CAMT that folks will be familiar with. We just got 620 pages of regulatory guidance under CAMT. They're incredibly dense. There's more guidance that will be coming. We know that there may be some tariffs coming and regulations around the tariffs, and then implications around Loop or Bright decision, which really was an important decision, a Supreme Court decision that adds regulatory uncertainty to areas that we thought were settled. And so we don't know the additional regulatory changes that may be coming from the new administration, but we know that what confronts us today is already pretty dense and pretty heavy. So a good example of the regulatory developments that we have in front of us today are with respect to those CAMT regulations that I mentioned. They create a massive amount of compliance burden for companies that have spent the last 2 years waiting for clarity on the rules. The most recent regs dropped on September 12th. There is a comment period, so we encourage all of our colleagues and organizations to submit their comments on that. But it's really very much a challenge to deal with those CAMT regulations. And it's not just the substantive challenges under CAM2 and P2, but they involve a mix of tax and accounting concepts. It's a new approach that tax authorities have been taking to kind of bring tax and book into some sort of parity. But the complexity that's required results in many taxpayers having to create now a third set of books to take into account these quasi book and tax concepts. It's very expensive, it's very complex, and ultimately, at the end of the day, many in-scope companies that go through the CAMT or the P2 exercise will find that the resulting liability, if any, is quite minimal.
Wow. Okay. So there was a lot to digest there. There was a lot of unknowns. You talked about compliance. So there's a lot's going to happen in 2025 that might be unprecedented or unknown. And speaking of unprecedented, let's talk about the talent shortage. We've spent many hours on this podcast and other webcasts talking about the shortage of accounting and finance talent. How does that talent shortage impact everything that you just talked about?
Yeah. So look, we're all feeling it, right? The market for tax talent is incredibly tight. Tax departments have long been, kind of human capital first. The tax trifecta is only going to add more pressure to that. Fortunately, though, now we do have Gen I, and we do see that playing a big role in supplementing that talent. And according to our survey, many C-suite executives have really become more open to using technology in their tax departments. They're seeing benefit when it comes to planning, as well as workflow automation, tax compliance activities, and cost optimization activities. In fact, the responses are over 40%, close to 50% in some of these categories of technology, automation, supplementation is being supported by the C-suite executives. So the C-suite, as well as the tax departments, are seeing that Gen AI can play an increasing role to support the talent. Now, we're confident that the power of technology plus the talent of the human capital is the winning formula. Gen AI is definitely going to augment tax professionals, but we don't see a future in which it replaces the need for our smart tax professionals. And in fact, the survey bears this out as well, where 86% of those folks surveyed agree that generative AI tools will help to supplement the tax needs of their tax department. So an openness to that, but also that we're still going to need smart professionals to really lead the way. And we do believe this is a differentiator for KPMG, by the way. Our tax technical experts team with the cutting edge tax teller generative AI tools that we're going to talk about or can talk about is really very much a winning combination. So we have what I would humbly say are some of the leading tax professionals in the world. We have folks that join us from Congress, from the Hill, from Treasury. We combine those folks with our cutting edge tax technology experts developing our digital gateway platform that is Gen AI enabled. And we come up with a great solution with both the smart folks and the smart technology supporting them to kind of take up some of that slack in the talent shortage that we're seeing in the market.
Right. One of the more interesting parts of the survey was you would ask leaders, who would you rather hire for your tax departments? Tax experts who can learn technology or technology experts who can learn tax? And I thought it was interesting, the difference in the responses from 2021 to 2024. Could you talk about that a little bit?
Yeah, sure. It's interesting that you teased that out of the different survey questions, because that kind of jumped out to me as well. Having had these discussions with C-suites and with tax professionals and tax departments around the globe, I think historically the answer has always been, hey, of course we want to hire folks that have that core tax training, and if we need technology, we can augment it or have the technology group kind of come in and help our tax function. That is really, we've seen that slowly flip, and just this past year we've seen it go over that 50% mark, which was really interesting and consistent, I'd say, with the trends we've seen. So just to back up a bit, so for the past few years, the survey, we have pooled the C-suite about their hiring preferences and say, hey, would you rather have the tax experts that can learn technology or technology experts that can learn tax? And so this year, there's a 12% increase over the past couple of years, and now we're over that 50%, where the C-suite increasingly favors a level of technological proficiency from a technology matter as a foundational skill, and then say, hey, you know what, we can augment that with knowing the tax rules, as opposed to know the tax rules and add the technology. And I would say, I think we're always going to need a blend of that, but that really ties back to that trifecta concept that we said, which is no longer can a tax professional on the back of the envelope sort of figure out the direction of how an implication might impact their organization. Even just a change in rates can have some interesting applications when you go through the CAMT rules, the P2 rules. So you really need technology front, and then you need the smart people as well. And it seems as though the C-suite is viewing it that way as well.
Yeah. So speaking of sort of redefining the role of the tax department, the report referred to tax departments as data departments, which I found really interesting. So how can companies better leverage that data to help organizations make better informed decisions?
Yeah, that's another one of those questions, Don, that we have been wrestling with for some years. And I think the moment's finally here that the light bulb has gone off and said, wow, all the data that the tax departments touch, and sometimes they touch it for one reason and then hand it back. Can't we mine that data and be more efficient with what we as a tax department do with the data we receive? Take it, use it for multiple purposes, use it for different planning opportunities, use it for compliance opportunities, touch it once rather than touch it for a lot of different reasons. And we get a lot of data in the tax department, massive amounts of information flowing through it. So data is really core to planning and solving for many of these trifecta related concerns when there's different modeling that has to go on. And of course, it can be really challenging for tax departments to collect all the information that's needed for the C-suite to make informed and predictive decisions. So our survey found, in fact, that only 60% of tax departments really regularly leverage the data to influence their decisions today. And that seems to me to be a surprisingly low number until you step back and say, what are the practical challenges that we have as tax departments across the US and really around the globe? And that's so the remaining 40% that don't, it's not that they wouldn't like to otherwise do that. It's just there are these resource constraints to your earlier question of both technology and people. So with all the change, the risk management considerations, planning, compliance demands, tax resource constraints are quite common. And so the ability to really leverage the data is understandable. And that's why we're now seeing such a strong willingness of organizations to really partner with third-party service providers and say, look, we don't necessarily need to build it internally. Maybe it's too expensive. Maybe it's not something that we need in-house. That's not core to our purpose. But we would like to partner with some third-party providers, and they can provide that data solution and the tying the data into our tax challenges.
We talk a lot about the evolution of the profession, but sometimes it's hard to kind of see it or visualize it. And I think your report does a great job of kind of demonstrating, where tax departments and where the accounting profession is going. So we really appreciate this time. We're gonna have to have you back next year to see what's changed in this report.
Excellent. Thanks so much, Don. Really appreciate it.
Appreciate it, Dave. Thank you. Thanks for listening and watching. To access the full KPMG report, visit kpmg.com. And for more articles, resources, and events on business management topics, visit njcpa.org/hub/business management.